Good morning, everybody. It's Dan Basse and Ben Buckner back at you on Tuesday, the 14th of October. Again, was a day that has been memorialized for a long time, looking backwards to April, in which the U.S. will start charging for, of course, Chinese and Chinese-owned vessels visiting ports. The Chinese have done the same, as you can see, and of course, all of a sudden, the world freight market seems to be upended based on all these taxes. And what the Chinese have done is looking at U.S.-owned vessels that is either owned by a U.S. entity 25% or has a board represented by 25% of Americans. So all of this is in play. The Chinese have gone forward. The United States has gone forward on that. Ben's going to talk a little bit about some other items that the Chinese have done. But this trade war, if you will, continues to rise, and there's more tensions. I kind of reflected this morning in our morning wire that, President Xi may have had a bad day on Friday, according to President Trump, but it seems like he's having another one today. So I'm not sure how Trump wants to put that in terms of his thought process going forward. But unlike the Madrid, the Geneva, the Stockholm meetings, it does appear that the tensions are rising heading into a potential Trump-Xi meeting in APEC. Whether or not this escalation persists, I think will be key. And I'm not even sure the Trump-Xi meeting will be held, but the market, in particular soybeans, will not like that, because that means that we will lose that opportunity to export soybeans to China, at least as we head into the middle of next year. Remember that there is a 34% tariff on U.S. soybeans put retroactively in place by China when Trump put the fentanyl tariffs of 20% on all Chinese goods. So it's kind of where we find ourselves here this morning, Ben. There's still the three themes that we talk about, which is, a world that has too much wheat in world exporter hands, a world that is overwhelmed by U.S. corn production and supplies at over 18 billion bushels. And then the question, I guess, at hand is U.S. and China. But longer term, I think you're also going to point out very rightly that South American weather and the arrival of those crops will be very important as we think about, the first half of next year and maybe the December of this year.
Yeah, and I think, to start, we're just following the numbers. Risk management, something we've highlighted a long time. We don't want to be this bearish, but the input, especially since the latter part of last week, especially, that's just what it's been. Checking in on trade policy uncertainty, that is getting worse, not better. Checking in on the Chinese grain markets, those are going down, they're not going up. Yesterday, we checked on the Brazilian cash corn market, which seasonally tends to go higher after harvest is completed, of course. But that market's trending downward as well. And maybe there will be some South American hiccups weather-wise, but that also doesn't seem to be the case. So it's just kind of this perfect storm of weight on the marketplaces. And so to your point, Dan, it does seem like things are souring ahead of a potential meeting at the end of this month. Maybe we're both using this as leverage, both sides. But vessel taxes have kicked in, $50 per net ton on our side, equivalent to something like $56 per net ton on their side. Ocean freight is now expensive everywhere. And I think it's kind of unfortunate, given that the world spent a lot of money September, October, November ahead of the holiday season. So does that get disrupted? It is a big question mark that we've got. China this morning is also targeting additional companies in the U.S., subsidiaries of South Korea's primary shipbuilder, Hanwha. So anyway, none of this is getting better. It's all getting pretty worse. And so again, we can revisit all of this at the end of this month. But for now, China's not going to buy U.S. ag goods. I think U.S. ag goods are, for the most part, locked out of China at the moment just because of these vessel taxes. So it's something that dominates the market day to day, trade policy, of course, macroeconomic conditions. But I think what is next in the ag market specifically is not insightful, but South American weather. That's going to determine whether we stop, and not really the bleeding, but stop the building of grain and soy inventories, or do they stabilize or do they shrink? That is all going to be determined by Mother Nature in South America, and really just over the next 70 to 100 days. So the window is not very wide at this point. Here is the current forecast, and we're using the Canadian ensemble model. It has actually been the best in Brazil for the last 2 months. So I think that's going to continue to be the best performer. But anyway, the theme is that it's going to rain all over Brazil, especially in northern Brazil this week. It's going to rain in Argentina again next week, and it's going to rain in Paraguay and far southern Brazil every day for the next 2 weeks. So we take a step back, look at the 2-week forecast. The entirety of South America is going to be pretty well watered by the final days of October. So really no threats to that. I think what may be the first surprise is one, think about, again, risk management. Short season soybeans in Brazil, simple arithmetic, they're going to be harvested in a lot of places of Paraná and Mato Grosso second half of January. So it's just kind of a matter of weeks at this point, kind of staring at us in the face. Argentina, though, I think maybe the surprise. And I think what's jumped out to us, like wheat, ever rising Argentine crop estimates, which I think makes some sense mathematically. Here you see the USDA's Argentine corn yield forecast as of early September, just under 7.1 tons per hectare. And historically, that is not a very good yield. I suppose something like mathematical average, but there is, I think, a lot of upside in this. Even assuming this yield, we've got 53 million tons of production in Argentina. That's up 3 million tons on last year. Now, I want to show you, if we avoid drought November, December in Argentina, I think using something like 7.9 tons a hectare, 8.2 tons a hectare, all of a sudden, because there's been incentive to plant, you've got a crop of 59 or 62 million tons, the highest ever. And so that's, again, I think that is where our focus longer term is going to be. Is Argentine production higher or lower than last year? And if it's higher, we're building stocks of grain, corn, wheat, soybeans, soy products. Those will be in exportable positions. And so thinking again about how do markets react to this over the next 3 to 5 months, I think rallies are still going to be challenged. And so again, until we get, to me, some South American weather adversity, our strategy is unchanged. There may be ingredients for recoveries. There's pretty steep carries on the market. Let's use those, sleep better at night, and pass off risk to someone else.
Well, Ben, I couldn't agree with you more. I think the back end of the market, or the premiums that are in futures, provide the marketing opportunity for U.S. farmers to manage risk. And with that, we need to be thinking forward, not only to this year's crop, but to next year's crop. We at Ag Resource are 78% marketed on corn and soybeans this year, and same on wheat. Next year, we're 40 to 50%. That just makes sense to look at the opportunity and make sure that you can manage it. We wake up every morning watching South American weather, and we'll surely advise you if we see a problem, but today it looks pretty good. Any final questions, Ben?
I don't think so, no. Just know that every day now at this point, we're looking for the catalyst that changes all of this. And so our eyes and ears are open. It's just we haven't found anything yet. And again, I think it's all about South American weather. So that's focus on that every day. If there's a problem or not, that's going to be pretty critical.
And really, your point's a good one, because when you look at the world wheat market, or the wheat market in general, we did have a modest post-harvest rally, but then when the record large Argentinian and Australian crops came upon us, the wheat market's been in a tailspin. So if we do the same in terms of corn and beans in Latin America, I kind of fear the same. So have a good day, everybody. Good trading. We'll see how the trade negotiations continue to persist. I'm sure there'll be lots of twists and turns. Good luck, and we'll be back tomorrow.